Hello everybody, in this video I'm going to be doing a brief stock analysis for Take-Two Interactive, and this is not going to be any kind of deep dive into their financials, but more so me giving my opinion on the gaming industry, and I think I have a little bit of a unique perspective on this one just because I do play a lot of their games. I like to start off by taking a look at their 5-year chart just so you can get a longer term growth perspective for the company, and they're up about 430% in the last 5 years, which is pretty incredible, especially when you consider that that's without a Grand Theft Auto game coming out, which is by far their biggest franchise. And then if you take a look at the stock year to date, it dips to about $100, down about 20% when the overall market was down in mid-March, and then it went all the way up to $180, by far past its previous highs. And that has a lot to do with the stay-at-home orders and the lockdowns and people buying a lot more games and all of the gaming stocks really being up. But Take-Two Interactive is doing especially well right now. And then if you take a look at their revenue and earnings, increasing revenue by a pretty impressive amount year over year, which is really fantastic. A big jump from 2018 to 2019 and 20 because their Red Dead game came out, Red Dead Redemption 2, which is their second biggest franchise, and then a steady increase in earnings as well, which is definitely something you like to see. Now I'm just going to do a couple of slides on their biggest franchises. Red Dead Redemption 2 is a massive open world game with 70 plus hours of gameplay just with the main story. And then it also has online for people to come back to it for years to come, so it's a massive revenue generator. But it pales in comparison to their Grand Theft Auto games. When a new Grand Theft Auto game comes out, it's pretty much all anyone can talk about for a few months. They do an incredible amount of revenue, and they have online features, or at least the most recent edition, Grand Theft Auto 5 did, so people come back to it for years to come, and it's a massive revenue generator. And a lot of investors are anticipating Grand Theft Auto 6 coming out. I'm sure the stock price is going to appreciate greatly from the time it's first speculated that it's going to be announced to when it's officially announced to when the game actually is available for sale. And a little bit more in detail on that, if Grand Theft Auto 6 was to be announced tomorrow and then it came out 2 years from now, the stock price could easily double to triple. And they also publish the 2K games, which is really important for them because they come out every single year and they really need that year-over-year revenue. They can't just rely on the Red Dead Redemption games and Grand Theft Auto games that only come out every 5-6 plus years. And next up, I want to touch on a few points by the Bulls and the Bears from analysts at Morningstar, and here are a few positive points. The first one is that Take-Two has established large new franchises such as Borderlands and BioShock, and these actually aren't too new. They've been around for a decade, or close to a decade, but they're not quite as old as Grand Theft Auto, and they've also revitalized older games such as XCOM, which is a turn-based game, but a much smaller game in comparison. They've also come out with remastered editions for the BioShock and XCOM games, which are great revenue generators, and they don't require much of an investment. And then the next two games are talking about Grand Theft Auto, the second point being that Grand Theft Auto is one of the largest and best known video game franchises, which I've kind of already talked about. And then the last one I've actually already talked about too, it's that has an online feature which enables the firm to monetize the game for many years to come, and even though the game came out 7 years later, it's still one of their biggest revenue generators. And next up, I wanted to talk on a few of the bearish points by analysts at Morningstar, and the first one is that Take-Two is still very dependent on Grand Theft Auto games, and the failure to make a sequel would negatively affect the company, and I would say in a major way. A lot of investors are anticipating that a Grand Theft Auto game is going to eventually come out, and I'm sure a lot of people would back out if they realized it never would. And then a lot of customers and gamers would be extremely disappointed as well, I'm sure. And then the next point is actually one of the best bearish points against the company. It's that outside of NBA 2K, the game lacks an annual AAA title, which means, top tier, best rated big titles. And that can definitely hurt the company because if you think about late 2013, they were just swimming in cash flow. They had more money than they knew what to do with when Grand Theft Auto 5 came out. But I'm sure, especially right now, they're probably a little bit stretched for cash before they release any more of their big titles. And then just the last point is that Take-Two Interactive competes with much larger firms with a lot more readily available capital for investments, and that's very true. They're competing against companies like EA, also companies developed by Microsoft, which have basically infinite pools of cash readily available. There's also Activision, which makes Call of Duty games yearly. But you can also argue that really, really tiny companies are able to make really fantastic games. So it's really all about how well the company can stretch their capital. And then real quick, I usually don't even show this, but I thought it was kind of cool. The analyst gave it a 79% buy rating, which is pretty strong. And then lastly, I just wanted to show their balance sheet overview. They gave it just a 3 out of 5 stars, but I think it's mostly just because the stock is a bit overvalued compared to their standards. It's given a fair value of $148, even though it's at $164. And I think that's a little bit false. The stock blew up recently to over $180 because of the stay-at-home orders. So they got overappreciated. But now you got to think of the long-term effects of the Take-Two Interactive games. If people were playing these games in the last few months, they're probably going to want to buy their new games in the future. They have a narrow economic moat because they have some really successful franchises, which has made them have a really strong brand. Uncertainty high, I guess I would actually agree with that, just because if they were to be too stretched thin for capital, they could not have the investment to make the next Red Dead or Grand Theft Auto 5 game, which is really where they get all of their money. And then stewardship standard is fair. I actually know nothing about their top management, so I don't really have any input there. I've made videos on a couple of other gaming stocks, so be sure to come and check those out. And I actually do a ton of other brief stock analysis videos on my channel, so come and look at those if you may be interested in those. Subscribe for more content, and thank you so much for watching to the very end.